Hey guys, welcome back. So in this episode, I want to take a deep dive into AppHarvest, ticker symbol APPH, which has the goal of providing fresher food and sustainable growth. Now, AppHarvest has a pretty compelling investment thesis, and some believe that it's the future of farming. So will AppHarvest become a household name on the stock market, or will it fail to realize some of its potential over the next few years? So in this episode, I'm going to be breaking down what AppHarvest is all about and giving you guys some of my thoughts on it as a potential investment. Alright guys, so I'm excited to be talking about AppHarvest as it's not only stock that I've been looking at for the past few months, but one of my best friends mentioned that AppHarvest is the growth stock that he's the most bullish on. So after hearing that, I knew I had to dig into AppHarvest a little bit more and really learn about the problem that they're solving. Now, AppHarvest is building a resilient food system for America. Now, AppHarvest is the developer and operator of applied technology, large-scale controlled indoor farms, producing US-grown fresh produce for national grocers. So currently what's happening in this agriculture market is that the global food production is woefully short of estimated future needs. Now, there's a strong demand for local, safe, and reliable produce. The thing with AppHarvest is that they're strategically located, as they're located in Kentucky, which acts as a central hub for them in the US. And sustainability is a key driver of their strategy. So what problem is AppHarvest trying to solve? Why are they so important? Well, currently what's happening right now is that the world is enduring an agricultural crisis. The UN has found the world must need at least 50% more food by 2025, yet 50% of all fresh water is already dedicated to agriculture. So if you don't change, we're going to need 2 planet Earths to feed the population. COVID-19 really exposed the unstable nature of the American food system, and 70% of all fresh vine crops sold in the US in 2018 were imported. Now, this excerpt by the New York Times writes, "The world's land and water resources are being exploited at unprecedented rates, which combined with climate change is putting dire pressure on the ability of humanity to feed itself." And what bigger problem out there is there than not being able to feed and sustain ourselves? So given that there's this big looming problem, let's now talk about this market opportunity of the US grown produce. Now, we've seen a steady increase in the percentage of vine crops imported, with the majority of that coming from Mexico. There's an increased need to replace imports with domestically grown produce, as it's clear to see that there's been drastically more imports for a lot of these different veggies like tomatoes, cucumbers, and peppers than there was around 10 years ago. Now, AppHarvest sees their market opportunity in safe and reliable produce. Leafy greens is the number 1 category in produce, and they estimate this leafy greens market value to be around $6.7 billion. Now, the differentiator with AppHarvest is that they have these high-tech greenhouses, which they see as the future of farming in the US. They believe that customer demand for sustainably grown produce positions AppHarvest to win with customers while also benefiting from the use of less water, less fertilizer, and less soil per ton produced. They claim that these high-tech greenhouses have 95% of reliability of supply compared to 50% in open field growing. This translates to 30 times production yield compared to the open field growing, which is only 1 times. Now, as mentioned earlier, they're strategically located in the Appalachian Mountains. And one of the key advantages of this is that they're centrally located. They can reach 70% of the US population within a day's drive. It's also great that they're in this area, not in California, as this water-rich region continues to get wetter. Now, because they're centrally located and 70% of the US population is within a day's drive of Kentucky, this means that there's shorter delivery distances, which mean vegetables are fresher and more nutritious. They already have major distribution and logistic players in Kentucky, as they already have partners with the largest players in the space, such as UPS, Amazon, DHL, and FedEx. Now, that's merely on their operational side of things. Now, in regards to the distributors, they have access to top grocers. Mastronardi is one of the largest producers and distributors of greenhouse-grown produce in North America. And what this partnership allows is it grants them access to national reach across leading grocers, such as Walmart, Publix, Costco, Target, And really, the list goes on. Now, I believe this sets them up very nicely as they already have all the logistics and operations in place. Now they need to focus on just making the produce and making it right. And if they handle that side of the business, it's pretty clear that the revenue will start to come in as they already have a lot of these partnerships already set up. Now, as for the R&D side of things, they have a partnership with the Dutch government, other ag tech companies, and universities to utilize best-in-class technology in order to increase sustainably grown yield crops. It's great to see that they already have notable partnerships for a lot of these solutions and technology providers that cover everything from LED lighting, climate control, refrigeration, agriculture AI, infrastructure and robotics, and big data. Now, what this full suite of technology does is help drive yield and sustainability. Now, as we talked earlier with their domestic impact, how 70% of the population is within 1 day's drive, meaning that 80% less diesel is expected to be used in transportation. They have 90% less water than conventional agriculture and 30 times higher yields than open field agriculture. Now, they already have one operational facility running in Moorhead, Kentucky, that currently has around 72,000 plants, over 60 acres. Now, they already have a growth and expansion plan in place as they already broke ground in Richmond, Kentucky, as well as Berea, Kentucky. This broke ground in October 2020, and they're focusing on growing vine crops and growing leafy greens. So where are they in the development pipeline? Well, their first crop of beefsteak tomatoes were planted in October 2020, with the initial harvest expected to commence at the start of this year. We know that the Moorhead, Kentucky facility of 60 acres was constructed in October 2020. Now, the other two that we talked about are currently going under construction and expected to be done around Q3 or Q4 of 2022. They have another one under option in 2022, and they already identified 2 more facilities in 2023 and 2 more in 2024. I think it's also a pretty fair call out that they do have a pretty strong brand. They already have notable partnerships like Mastrodini, the country's leading greenhouse grown fruit and vegetable distributor, and they have a pretty impressive board of investors. They have food icon Martha Stewart on their board, Impossible Foods CFO David Lee, and a few others like JD Vance and Blake Griffin. They're actually a certified B Corporation, which is essentially a certification of this ESG performance, and they're a new kind of business that balances both purpose and profit. So now that we know a little bit more about AppHarvest, let's talk about their financials. Now, AppHarvest originally entered the market through a SPAC with Novus Capital Corp. The ticker already changed to AppHarvest APBH, but because it happened so recently, I think it's important for us to still take a look at it. Now, this transaction valued the company at a pro forma equity value of around $1 billion. And less cash on their books, that came out to an enterprise value of around $570 million. Now, taking a look at their projected financial and operating metrics, it's clear to see that they expect steady, but also very high growth rates in both their revenue and in their EBITDA. Now, for the full year of 2021, they're expecting full year revenue guidance of around $21 million. Next year, they're expecting that to grow to $62 million, which is approximately 200% growth. In 2023, they expect that to jump to $145, still greater than a 100% growth rate. So clearly, AppHarvest expects very rapid growth in the near future. Now, for the EBITDA, they're seeing around $41 million of a loss in 2021. However, they do expect to see profitability of $11 million in 2023. As they begin to scale, they'll start seeing a lot more EBITDA and start seeing positive free cash flow. Now, although these charts and these projections do look really good and sexy, I think it's important for us to realize that we're still not even halfway through 2021. So essentially, we're looking at a company that is pre-revenue, but is projecting out pretty solid financials. Now, as for my initial thoughts, I think they're a great ESG and ag tech play. Now, I do believe that these facilities are going to be necessary in the future as climate change begins to worsen. AppHarvest does have a lot of innovative technologies that they utilize to better their crops, so I would think of this as a technology company. I do think there's a lot of key standouts, like they use 90% less water usage, as well as that they are able to grow year-round as they do harvest their crops indoors, along with the fact that they don't have any chemical pesticides, and their facilities are expected to yield around 30 times more food per acre than traditional farming. Now, as a customer, some of the key selling points is that it's organic and also it's locally sourced, which I do believe that people care about. Now, learning more about this agricultural crisis, it's clear to me that there is going to be much more need for a lot more food and water in the future. And as we talked earlier, around 70% of all fresh vine crops sold in the US were actually imported. So I do believe that the US government is going to want to invest more heavily into US domestic farming, so this could also be another catalyst for AppHarvest. Overall, I do think AppHarvest is pretty compelling of a speculative investment, as they do have a lot of tailwinds behind them. Now, of course, we need to talk about the risk factors. So let's dive into the bear case. Now, the first thing that calls out to me is that they're still very early stage. Now, in 2021, they're projecting around 20 million in revenue. However, you can just think of this as pre-revenue right now. So AppHarvest is still really in its early innings as they're just beginning to ramp up their sales and get some traction in this overall market. Now, risk factor number 2 is that they're a commodity. And by that, I mean, because they're working in the agriculture market and that they sell these tomatoes, they don't really have that much pricing power over other competitors in this space. Now, of course, their key selling points is that they're organic and locally sourced. However, it's important to realize that they do face a lot of competition from a lot of other established farmers. And lastly, number 3 is their current valuation. Now, AppHarvest came to the public market via a SPAC, and the enterprise value was listed around $1 billion. And that was with the stock trading around $10. However, today, at the time of this recording, AppHarvest is trading around $20. So the valuation is almost 2 times. Now, doing a quick back of the envelope calculation, if their market cap is currently sitting at $2 billion and they're projected for the end of 2021 to have revenues of $20 million, that puts their price of sales at 100. So currently looking at their valuation today and the current financials, they're extremely overvalued, and this is going to definitely be a speculative investment. As for my closing thoughts, I do like this company. I do think their products and technology is very innovative, and I really like the fact that they do have a lead within this space in the US. Now, with all that being said, I don't plan on building a position here because I do think it's just a little bit too speculative of an investment. For me personally, I would rather wait a couple quarters to see how the company starts to execute. And if the company is able to exceed not only analysts, but my expectations, then I do think the stock is worth a revisit. So as of right now, I am going to put it on my watch list and see how it performs over time. I would rather wait about a year, even if the stock runs up, let's say 50 to 100%, as it would help me get a much better grasp and idea of how well the company is going to perform over the next 3 to 5 years. I would rather sacrifice that 50% upside rather than get in now, have them not perform or execute, and see the stock tumble around 50%. As a company that's still pre-revenue, I'd rather wait to see how it executes over the next year, and at that point, I'll have to do my analysis again to make sure that it's a compelling buy at that point. So with that, guys, that was my breakdown of AppHarvest. Thanks for sticking around. I'll see you in the next one, and let's go get that bag. Hey guys, thanks for watching. Don't forget to smash that like button for the YouTube algorithm and click that red subscribe button if you want more great content like this. Now, if you're still here, I know you're a big supporter of the show, so I wanted to fill you in on something big that I've been working on. Now, on Friday, I'm going to be launching a Patreon to build a community of like-minded investors looking for the next multi-bagger. If you guys are interested in getting my stock buy and sell alerts, looking at my whole stock market portfolio, and having some Q&A live streams with me, then I'll go ahead and drop that link in the show notes for you guys to go check out. Thanks guys, and check out these other great clips from the show.